The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thank you, Steve, for 2 great hours. And I come right in here and hope to be able to follow up with the presentation here. Dow is actually down 104 at 13,882. The 13,860 area for me in the Dow is going to be quite critical to hold. 1501 on the S&P, down 10. Comp index is down 25 at 3142. Gold was up, then it was down. Now it's up. In fact, it was down quite sharply earlier on. Now it's up 20 cents at 16.78. Silver's down 13 cents at 31.79. You've got platinum down $1.50 at 17.34. Fantastic charts on platinum and palladium. High-grade copper is down 85 cents at 3.73. Most important right now is that bonds are only up a half a point at 144. I'd like to go into this. I'm going to talk about it in the framework of a pattern that I've been talking about for some time. It's called the stork leg formation. What is it? It's just a series of highs. It's not one single leg. It is the bull phase of an opening call that takes us up in not a straight line, but almost like a straight line with no more than a 1 to 3 day consolidation or 1 to 3 bar consolidation. And then there's this oval formation that happens, and the price has a difficult time breaking to the upside, has a difficult time breaking to the downside. It almost always looks like an oval pattern. If you're looking at Tiger 1 right now, let me just put this on for myself. What you will see is that the E-minis has gone to a peak F, but it's been holding the 9-period exponential moving average. And I spent a lot of time with my subscribers this morning explaining the 9-period moving average, how important it is in my work at certain points. There are other moving averages that are very important, but the 9 has a way, especially in a bull phase of any up leg of any stock or index, to be able to give you fabulous price points of support. It's sitting right now at 1499.20. That is exactly on the 9-period moving average, having gone below it for the third time, only the third time since it broke out in December the 31st. That is incredible action. Just that one indicator alone is remarkable. In the way it allows you to use it as a sense, it gives you a sense like a GPS. It gives you a directional sense. But unlike a GPS, which can also look forward, all this does is it looks to the price point you're at that very moment. Now, the stochastic and the MACD are turning down, but the stochastic is still at 84%. I'm going to explain something that I think is going on here. And I have to reference Thursday, February the 7th, 2013. This is now 1978 was the day of the huge storm. As I said yesterday, I got some funny stories about that, but I don't want to waste time on stories right now. It's just way more important to get to the market. Right there, the front page of the Boston Globe. Oh, I should have gone to it electronically. I should have done that. Anyway, it has a picture of Arthur Walsh, 70, retired electrical engineer. Quote, "The market does not correlate well to people's well-being," unquote. And what is the title? Right there, big, nice piker. Just not quite the same as the front, the headline. Doctor gets $7 million in gender bias suit. But it's bull market, ? They don't buy it. Then in smaller print it says, Dow reaches pre-crisis levels, but many are still on sidelines. Can you imagine if this was the opposite? We were now going down to 66.50 to the low of March, almost 4 years ago, how big the headlines would be. This is all they can do right now. Bull market, they don't buy it. It's the most uninspiring article by Beth Healy. Oh, Beth Healy, who I happened to hear just moments ago as I quickly did an errand here with the big storm coming. I had to go and do a couple of things. I have to tell you, even Mark Zandi is quoted here saying, "I don't think anyone is cheerful yet." We've had over 100% gain and this is all they can come out with, I have to tell you that, yeah, on a short-term basis, we could see a pullback. I'm anticipating, and now I'll get to the actual chart formation, I'm anticipating something to happen. But I have to tell you that this is, I wouldn't say that it's very bullish, but it's not bearish news. I mean, this is just this big question, but that wasn't the issue. On page 813, it's the chart. I love charts because charts give you the reality. And what it does, it shows you in 2007, January the 31st, 2007, at the Dow 5,964 high, there was this influx of buyers in mutual funds. And then kaplop, we went all the way down to the 2009 low. And the monthly investor contributions made a low in 2008. And then what happened is it spiked up again somewhere around 2009, and then it kept coming back down. And then in 2011 made a higher low. And then all of a sudden you look at January 31, 2013, 5,964 was the price of the monthly investor contributions to the U.S. stock funds. I'm saying to myself, 569, that wasn't the Dow price at that point. Okay, so January the 31st, 2013 is 3,518. So this is a very interesting chart as far as I'm concerned. It is saying that there is room to grow on the upside if, at least the thesis that I've always gone by, is that the public is always in at major tops. And they come in droves, and we have not seen that. So looking at, I really think that it's a very bullish sign. All right, let's get to the nitty-gritties. We've got Mark in Denver. And Mark, how are you?
Good, how are you?
I'm very well, thank you. Looking forward to see how I survive the storm, and I'm also supposed to go up to Brooklyn. We'll see what happens.
You got to shovel out?
Well, I'm all ready. You can throw anything you want at me. I am ready.
So talk to me about, I was looking kind of intriguingly at Microsoft.
So you don't have a position? You don't have a position yet?
No, I'm looking at possibly taking a long position, thinking we have a shot at a peak at a D in the daily, or am I misreading?
Well, let me just explain something to you. When a chart formulates a particular waveform and then consistently does that waveform, I look at it and I say, okay, are you going to keep doing this? And what happened was, do you remember when we had Peter calling about the euro, and I kept saying this is a very unusual chart pattern. I've been working a lot with it for the past year to 6 months. Well, now it's even longer than that. And it was a peak C, and then just underneath it, there was a peak where the technicals were fading, but it didn't go above C, so I called it C1, and then C2, and C2 actually gave a sell signal. Right. Well, Microsoft gave a peak C minus when it ran to 27.73 on the 19th of December. It made an arch formation, which should have been a very bullish arch formation because it held the low of 26.26 back on the 5th of December, but it ran up, and I don't believe 27.73. I don't think it took it out. Oh, it was a double top. So there, isn't that interesting? I love these techniques that you develop, and then all of a sudden they get very fine. So it goes to C1, and then it goes to C2 because it made a double top, but it did not go 1 penny above to give you that D. Then it pulls back, and it pulls back to where? It pulls back to a double bottom at 26.29 and 26.30. Well, the low that we're looking at was 26.26. So here again, that's a positive divergence between the left side low, and the technicals were a lot better. So this time it goes higher, and I should actually put this in here. I've got it as a C, but in fact, that is the reconstituted buy signal that failed at C2 at 27.73. I'm calling this D. Oh, please, I went through that again because I had to wait. So why? Because it didn't break 26.26.
Right.
So to be safe, I'm calling it D. If I'm wrong, in fact, probably what I would have typed in here was a D/C. And what I wanted to say to you is anything that you're charting, if it starts to fail at C, there could be a habit. That could be the way that could be the way of its chart formation. But normally, if it's failing at C, that's a very bad sign, and it should go to a lower low. So now we can get to the story, because now I can talk to you about it in a very different way. Microsoft, as far as I can tell, and I haven't done a great deal of work, but I have listened to what people have been saying, Microsoft seems to me now to be more a fund manager's way of playing it kind of safe, treating it as a dividend stock with the potential at some point to come back into favor and then have a decent rally. But my chart patterns say that the weekly, this move that we've just had from the 28s down to the low 27s, it's not a good sign, in the sense that it should really have gone into that very ugly candle. The candle that I'm looking at is the candle of the 16th of November. 29.01 was the high, 26.34 was the low. It should... it went to 28.23, 29.01. It should have done better than that, and it wasn't even the better than that. It should be closing. In fact, if it was closing right now, right, it could be underneath the high of 28.23. It could even be at 27.90. I'd be saying to you, this stock is starting to not act well, but it's starting to act better. So this is what I'm going to say to you. If you're looking at this from the sense of your call, I think you're looking at it as a potential, I wouldn't call it a buy and hold, but more than a short-term trade, more than a swing trade. You're looking at it as a potential 3 months, 4 months, maybe even 5 months as a long. Is that correct?
Yeah, I was looking at it here thinking maybe I could get it to get back up into that 28 to 30 area.
Well, it's only down 18 cents, down 0.68 when the Dow is down 0.76 and the S&P is down 0.67.
Right.
So it's kind of matching the market. I'm going to make a recommendation. I don't think there's a great rush to get into the stock if you're looking at it as a longer-term position. This is my stance on Microsoft, because I've looked at it very often and I thought, well, wouldn't it be nice just to cozy up to an old, huge winner? I mean, after all, Microsoft at one point was in a $53.97 stock at a peak D-top back in December of 1999. Well, it's lost a lot of favor, and it went all the way down to $14.87 just about 4 years ago. And then it rallied to a peak D, and it only went, and this is the monthly chart, it only went to 31.58. So I don't think there's necessarily a rush to get into it. I tell you what I'm going to do. There's a break coming up. We've got a caller after you. I'm going to do a little analysis, a little bit more detailed analysis based on the ChapmanWave, and then I'll tell you what my sense of entering a small position and maybe adding to it will be. Do you mind holding?
No, it's fine. Thank you.
Great. Folks, we're looking at Microsoft. And Microsoft is at 27.17, down 18 cents. We'll be right back with Mark and Mike.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Mark, and we're looking at Microsoft. You know, Mark, Lonely in the Den, and we have this fabulous medium here. We've got the Tiger TV. We've got the Den. The Den is where we have just so many folks that are there with ideas, and they talk about different chart patterns, etc. But what's very important to me is that we get when I mention something, it doesn't take more than a split second for someone either to correct me or to give me the advice that I need. In this case, Lorna in the Den says Microsoft goes ex-dividend on February the 19th, 23 cents. Dividend yield is 3.37%. See, I never look at a dividend stock as a dividend stock. I look at a dividend stock as either going up or down. If it's going up and I can see capital appreciation, then I'm prepared to look at the dividend. But I don't want a stock that's going to drop 10 or 15% with my capital reduced 10 to 15% over a lousy 3.7%. So this is the way I would look at it. I'm going to say hold off on Microsoft. I did a little work in the break on the 120-minute chart, etc. It came back under the 200-period moving average in the weekly chart. I would rather see you buy some strength than weakness. I don't want to catch a falling knife, and this is the way it is right at this particular point. I'm going to suggest you just hold off a little bit, and if what is today? Thursday. So if next week, maybe by Tuesday or so, if Microsoft is just a little bit over 27.47, the 9-period moving average, and I'm starting to see that the weekly chart really is improving, based especially on the close tomorrow, then I'm going to say to you, okay, now you can do it because I can see that there's a chance to go back to the 28.20s, which will be very important. But even more important, I want to see a strong leg C up in the weekly chart above 28.23, the double top that was made for the past 2 weeks. So I'm going to say to you, hold off. If you want a longer-term position, it's much better to get a good sense of the base being formed for a move up than to be, because if it takes out $27, around number 27, that was the low of the 22nd, there's a good chance it's going to make an arch formation. I don't want you to be doing that because, 1.5 points on a $27.50 stock when you actually also hoping to get the dividend, I don't think it's worth it. I'd much rather see the stock. I would buy it into strength. So I'm going to say to you, hold off. Let's look at it maybe 4 days, 5 days time. If it's been holding well, it hasn't broken underneath 26.80 or 27, that area, then I'm going to say to you, okay, maybe now's a good time. But hold off, okay?
Thank you.
Thank you very much for calling. Let's go to Mike in New York. Hi, Mike. How are you?
Good. How you doing? Today I'd like to look at a company that's revolutionized the treatment of blood cancer, Celgene.
Okay. Yeah. This is therapies, cancer, immune, inflammation diseases, etc. Yeah, this is a fabulous company. Yes.
Right.
So what I'm looking at here, it's a little unusual. You have a long position in it?
Yes.
Okay. So this is what I'm going to recommend. Be prepared that after a tremendous move up that it's just has Celgene CELG at 97.31 is trading at 97.24 right now, but it had hit 102.24 back on the 1st of February. So it's a little unusual in that I've called this peak C, but because it was kind of news related, my suspicion is that the C could fail, so I'm not going to put that much weight in the ChapmanWave notation at this point, but I am going to put it in the stochastic and the MACD. The MACD and the stochastic in the daily chart are declining quite sharply, but the weekly chart, fast-moving average, is still really it's very, very strong in the MACD, and the stochastic's at 97%. I have a leg in the monthly that says it's a leg F. Everything about the company and everything about the chart says it's probably F/B. In fact, I need to put that in because there's nothing technically that should, at this point, that should say to me that it's an F, because there really is a parallel wave count. F/B. F is negative and B is very positive. This is what I'm going to recommend. If anyone's in the stock on a very overbought situation right now, if you just want to take a little money off, I would say I'm fine with taking it. Keep your core. You have to. This stock, there's something going on with this stock that is really positive. It is extended. It really has a pattern that says it needs to pull back towards the 90. It's at 97.22, towards the 94 to the 92-ish area at some point over the next few weeks. Not a big deal, but 92.29 is a 9-period exponential moving average. So all I'm going to say is if you or anyone that you know is in the stock, you've had a nice profit, I would just take a little bit off right now, and that's money that you probably want to put back between 92.80 and 91.90. Somewhere around there you want to put that particular amount of money back. So I hope I've helped you, but there could be a D, and D could just go slightly above 102.29, but my feeling is that it's going to consolidate.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and we're going to go straight to Ben in Tallahassee. Hi, Ben. How are you? Ben, you there? I think there's always a little delay here. So we've got Ben. I'm waiting. Ben. Oh, I think he's on delay stream. That's what I think. So, Ben, as soon as you come up, you just yell and say, I'm here. And but Ben wanted to talk about the Dow Diamonds. So the Dow Diamonds, that's a trading vehicle for the Dow. It's the SPDR, Dow Jones Industrial Average. And I'm not sure what Ben's question is, but I'm just going to go through right now what I'm looking at here in the Diamonds. The candle that we're looking at right now, this is going to be very important, because if this candle takes out 138.32 was the low of the 31st. If it closes, it can just sneak under it and bounce back, but then it can't go under it in the next 2-3 days. If, in fact, it closes underneath 138.32, and it really closes there quite decisively, then I have to conclude that the peak E that we just saw was in fact the top. It's one of the reasons why we're not in it now. We went short the Dow at the peak D. You remember the Dow and the diamonds were just one letter apart. The Dow just missed making a peak, and so it's only a D, and that D was at 14,019.78, and that was on the high of the 1st of February. Now, what's really important about this, and once again, I'm just going to say, if Ben, if you are there, just say, hi, I'm here. But in the meantime, the Dow today has gone just a tad under the 13,860 level. And at 13,860, see, normally when we get to a peak D or E in the Chapman wave, in the Dow, you're there?
Hello?
Hi, Ben.
Oh, sorry about that. I apologize. Yeah.
Yes.
Hey, my question is, 4 to 6 week horizon. I'm not focusing on the day-to-day. I'm focusing on the weekly chart of the DIA. And if I have a 4 to 6 week horizon, I'm still taking the stance of staying long, and just wanted to get your take on that based on the weekly and monthly.
If you are holding long, you have to be prepared that if this is going to be a confirmed peak D, short-term top in the Dow, peak E in the diamonds, let me just quickly run through a couple of things with you. We'll do this together. We've got time, and I'm sure that I know that I would like to go through it right at this particular time, mid-morning, and we'll see. If I look at the volatility, and I'm going to answer you in a moment, but I want to give you a perspective of what I'm looking at. The volatility index is up 87 cents at 14.28. Now, it might be early in the day, anything could happen, but that gap at 1593 was the high of the 2nd of January, and the low on the 31st was 17.88. If the volatility index goes into the 16s and the TLT breaks into the 119.50s, right now it's at 117.42, and the dollar, which was acting very well, had a lousy day yesterday, but today's 2 days ago, in that it rallied and then fell, and the dollar now has reached what I said to subscribers this morning, the 80 level is what we've got to see in the Dow, in the dollar, because that's going to say, aha, now what you can see in the dollar is something a little differently. So I'm going to answer you in the sense that I'm looking, if there is a pullback here, I'm looking for the weekly to have about, in fact, the weekly Dow, that's very interesting, because I don't think Monday we made the new high, because this could have started. I'm going to be able to answer you very quickly. Yes, this is, in fact, potential peak B if by tomorrow that 14,019 level is not taken out. So we've already started the correction, and I don't think the correction at this point is going to take more than about another week or so. 13,600 is the 9-period exponential moving average in the weekly chart, but the stochastic still at 97%, and that's the reason. And the MACD is still very strong. So I'm anticipating that this is a pullback of some consequences on the short term. But if you say 4 to 6 weeks, I've got leg C probably coming up within 4 to 6 weeks. If we're making peak B, I think leg C starts sometime by the last week of February. It starts to get towards the 14,000s again, and we should start to go to the 14,100s sometime in early March. That's kind of what I'm looking at right now. February, March, yeah. But what price are you in at? That's really important. I don't want to see you take a profit and turn it into a loss. So you have been in, right?
Let's see. I'm probably around 130, 136 or so.
So 136. So this could give back all the way to 136. 136. Let me go back to the diamonds now.
I was just going by the daily body as it goes through that, the stork body.
Right. And what I was
too hung up in that. Yeah.
Yeah, I want you to look at the bigger picture. And what I was looking at is that even if there was a spike above the 14,019s, I expected that to be the neck part, and then I expected it to stop probably just under the old high of 14,198, and then come back and then go into the body, kind of where we are right now. So, in fact, if we close ugly today and we have a lousy day tomorrow, there's no question that the short term has gone from it will go to a sell signal and maybe even a sell mode. That would imply that you can expect 5 to 7 days further of a pullback. So your biggest question, I think, right now, since it would be fine to get back in if there is a pullback to that 136 area, is to say, is there any chance right now that we're actually going to go above the high of 139.89? Isn't that really the question? Because if there is a chance of going...
Yeah.
If there is a chance...
Really, it's just, I guess I'm willing to keep it fairly low stop, knowing that it's only in B and C to D to come, and not try to play the day-to-day stuff anymore. Just
okay.
My brain's getting a little fried on the day-to-day stuff.
Yeah. So don't. All right. If I agree, if you want the longer-term perspective and you're in it, so where would you put your stop if you were in the 136s?
Unfortunately, I don't have a chart looking at it. I guess I can adjust that accordingly. I guess the biggest question for you was, do you still have that strong confidence we're in B and not something different like a B failure?
Or the alternate would be E. That's really the question. Is that an E or is this a B?
Correct.
And everything about it, I have to feel very strongly right now, based on what I'm looking at, is that it's a B.
Good. That's you're right. I'm glad you pulled it out of me. That's really the $1 million question I've got.
Okay, and 135.76 is the key support in the daily chart. Now, let me just run this quickly. General Electric made a high of 22.64 and is pulling back. It needs to climb to 23.18 to retest the previous left side high. Triple M made a peak D. So all of a sudden you've got Triple M at a peak D, you've got GE at a peak D, but the weekly of Triple M I've got in C. I don't see how I can call it anything else but leg C. IBM, on the other hand, is a little bit weaker, quite a bit weaker. It had a big spike up to its new earnings report, I guess, on the 23rd to 208.58. It's down to 198. I don't like that chart pattern much at all. But UTX has made a peak E in the ChapmanWave, but I'm calling this, at least for now, I don't really have much choice but to call it E in the weekly, which doesn't correspond to anything else, but I have to go with the waveform, but the technicals are still very strong. So 3 out of 4 of those, my little Dow mini index, are very good. So if that's the case, I'm going to say to you, 135... let me go back to it. 135.75 is a 9-period exponential moving average in the Dow Diamonds weekly chart. It could dip a little bit below it, but my guess is that it won't be dipping under it for long, and it'll try to come back. So I'm calling this B, and I still expect to see C and D. So, with that said, now the Dow is underneath that 13,860 level. It's at 13,854. I have to call this at least a sell signal that we're looking at in the daily. So I hope that gives you some sense of what I'm looking at. And my monthly, I have to call leg C. So the monthly says higher highs are still to come.
Very good. Thank you very much, Basil.
Thank you very much for calling. So let's go to our next caller. We've got Mohammed in Glendale. Hi, Mohammed. How are you?
Fine. Thank you, Basil. And thanks for taking my call.
My pleasure.
I was wondering if you could analyze Pulte Home. I'm not sure if it is about to break the 200-day. Do you think it will, or would it bounce from here?
Well, this is a very interesting stock. Folks, we're looking at Pulte Home. This is Pulte Home, the very same Pulte Home that once upon a time made a peak G at 48.22. I believe that it split soon after that, but let's call it 48.22. That was back in July of 2005. I'm going to type that in so I don't forget 48.22 because I'm moving over to the white background charts. People have asked me to stay with them because they can print them out. It went down a little bit. It dropped from 48.22 down to $3.29. But it's had a spectacular run. And this is only, I have to call it leg B in the monthly chart. And then leg B went to 21.97. Now there's a technique that I use, which is the left side, right side price time match. It went to within 1 bar late of getting that exact time match. I was asked yesterday by someone in the den how I get the midpoints. This is a great example of using the exact high of April of 2010 to get the left side, right side price time match. MACD is very strong. Stochastics at 91%. So I believe that the home builders are this is a very important digestive phase for them. I've got it in leg C in the weekly. Oh, could it be a peak F? I don't know. I'm calling it leg C for now with an important digestive phase going on. But most importantly is that the daily went to, is that a parallel high? Yes. There was a parallel high, which in this case I'm going to call, it doesn't really matter whether I call it a peak C or I don't call it anything because it would have gone either to a G or to a D. So the daily has given me a sell mode. That's the daily, from a sell signal to a sell mode. And that says that it could pull back, and it could pull back towards, it's at $19.16. I'm going to watch it closely because I would like to rebuy some of the home builders that we had a long time ago. And the level I'm looking at is $17.30, the low of the 27th of December. Between there and the low of $18.32, that's the level I'm going to be watching very closely. So, do you have the stock, or are you just looking at it to see?
Yeah, I'm looking at it to see whether it will hold that $17.5, $18 range.
That's going to be important, and I'll tell you why it's going to be important. Because if it breaks down from that, then the MACD will continue to expand, and the level that I'd be looking at, I don't think it's going back to 1581, which is the low of the 6th of December. No, from my eye, the way I'm looking at it right now, there could be. Yes, I think you've got to anticipate that the 17s, the low 17s, is going to be the place to look at it as a possible entry. Now, I tend to, because I do so much work, I tend to sometimes forget to look at these. I've got my list, but I might even forget on a particular day. So, if you don't mind, let's look at it together. If you can, if you're around next week, Tuesday or Wednesday, let's look at Pulte Homes again and see what it's doing, because 1628 is the very strong support in the monthly chart. I'm not sure in this particular move down that it's going to go there, but let's look at it in a couple of days. It's a little early right now to look at it as an entry point, but I think it just needs more time and maybe a little bit more on the downside. So if you call again next week, let's look at it together, okay?
Okay, sounds good. Thank you so much.
Thank you, Mohammed. I appreciate your call. Always appreciate it. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Basil, I do apologize if you're already talking about home builders.
I was talking about one of them. I was only talking about Pulte Homes.
Okay. What I'm trying to do, I wasn't listening to the show, but if I recollect what you're talking about earlier, you still, because of the stock lag, you're still expecting a bounce, one more bounce. So try to catch RYL for it, just a bounce.
Okay, hold on. We've got a break coming up, Freeman. Can you hold on the line and we'll come back straight after the break?
Yeah, that's fine. I can hold.
Okay, great. Then we'll talk about both the Stork Lake and Ryland Homes, which is what you want to look at.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're back with Freeman in Dallas, and there are two questions. So the question that you have, first of all, is I just discussed it a few minutes ago. Having gone underneath the 13,860 level, says to me, okay, now you got to be careful because the stochastic and the MACD are turning down. Stochastic's still at 86% in the Dow. Now the MACD is just turned negative right now. The width of the fast-moving average crossing the slow movement, the beta between the two lines, is going to be giving me a sense of time and price. That's number one. Number two is if you are looking at the pattern of the stalk leg, there is a chance that this can just extend out a little bit, because usually I like to look at time. I like to look at maybe even 12 to 15 bars of the consolidation going on before it breaks to the upside. So I don't want to be too clever, too smart. I said to subscribers this morning, I'm upset that we don't have any shorts, and that although our longs have done very well, I wanted to have a short position, but I didn't have a short position. There's still time, because if this is going to go down, there's time to put on short positions, because we'll get a clue tonight as to which stocks are failing and which stocks are holding well. So all I'm going to say to you is, I wouldn't be too clever right now and be looking at, even if there is a pop to the upside, I'm still only looking at the 14,050 to 14,100 without maybe taking out the old high, and then coming back into this oval formation. So I believe this is a very necessary pullback. I looked at so many of stocks that were in leg D and E in the daily charts. Most of them need to have some kind of a pullback. This is very important to have. We're having it. So you had a question on Ryland?
Yes, well, I just wanted to play a bounce. It's been coming down from 42 to the 36 now. And
hey, you know what? It made a 43 round number high in peak E in the daily chart on the 30th of January. It was a D in the weekly chart, the week of the 1st, and it's a leg D in the monthly. So the Ryland, and it was one of the leaders, might be saying, hey, timeout coming, 36.80, it might have to touch the 34 to the 32.30 area over the coming week or so. So I think it's going down. And I'd like to look at it again when it consolidates and has a good, stable platform. Hope that helps you.
It does, Basil. Thank you very much.
Thank you very much, Freeman. Folks, I have a webinar coming up for subscribers, and it'll be a Wednesday night, this coming Wednesday night, February the 13th. It's an hour-long, 6:30 Eastern Time to 7:30, and this is only for subscribers. But we're including, it's a special really, we're including anyone who takes a 2-week free trial. You can also join in, and please come. And I'll explain all these different chart patterns, why I'm looking at it, why I said this morning that I would like to get back into the DXT. I was expecting just a little higher price. Hey, sometimes you just can't be too clever, but that's just the way the patterns were working. To miss a little bit of a move, a 1% move, is just not a big deal, because if we're going to be coming down, we're going to be going down into next week. So there's no real rush for anything. So I like to get the timing exactly right. Sometimes it doesn't work out. But most importantly, what I'm looking at is the MACD has crossed to the downside. The day is young. Anything can happen by the end of the day. So I'll be watching that. If the Dow manages somehow, instead of closing down 126 right now, instead of closing down 157 points, if the Dow manages to rally by the end of the day, I'm not sure it can. I'm just saying if it was, and it got to 13,000, just over 13,900, that'll be that containment area. It's always very scary in this containment area. You think it's going to break out, then you think it's going to break down. And what it does is it just keeps trading within this. And eventually it has the big spike to the upside. In this case, it'll be about 50 to 100 points from the previous high. That's 14,019. And then you've got to be careful, because at that point it could turn around, and that's the neck, forms the head, and it can come sliding back into this pattern here. So you got Larry Pesavento coming up. I'm sure Larry's got a ton of things to say. If I want to just go through this quickly as we're wrapping up, look at the ChapmanWave methodology. You've got the Euro Peak D. You've got the USD JPY. Peak E perhaps. So that's the way we look at these things. I use the ChapmanWave methodology to see if we're getting to a D or an E. And did I hear the music? Did I hear the music? There it is. Thanks for being here. I'll be back tomorrow. Stay tuned for Larry.